Hey, Dan Passarelli here. Happy Friday, especially if you're hedged or long puts, but happy Friday nonetheless. The market was down quite a bit today. Now I'm recording this about an hour and 10 minutes before the close. Let's give a brief history of what happened with the markets during the day up to this point. The markets opened lower, close to around 4%, went a little lower after that, and then actually made somewhat of a comeback when it was announced that the U.S. government and Vietnam may be in talks about lowering tariffs and reaching a trade deal, which appears to be the intent of this new tariff trade policy. And I mentioned briefly yesterday that I believe that as deals become worked out, if they do, then those will send the market higher. Small deals, maybe a little bit higher. Bigger deals, potentially a lot higher. The more deals, the higher. Now, these deals could be worked out in a couple weeks, or it could take a couple of years. Could take a very long time. We still are traders, and we trade opportunities. Now let's talk about, before we get into opportunities, let's talk about fundamentals outside of tariffs. Non-farm payrolls came out this morning better than expected. That is creating more jobs than expected. Next, this coming week, we have CPI and PPI, the inflation gauges, coming out, which is going to give good information. Why is all that good information? Well, it has to do with what the Fed may do with interest rates. Now, I think I also mentioned this either yesterday or the day before. All your favorite financial analysts and pundits, they all have extremely disparate opinions on what interest rates should do. Now, that being said, the folks at the Fed all have PhDs. They've been looking at economics their entire lives. I'm not going to go as far as saying I trust that they have it all under control, but the folks who are blabbing on social media and real media, well, it's just blab, right? So we're going to take the mile high view, and we're going to look at the broadest picture to make the best decisions about trading that we can. Now, I've been talking about covered calls and cash secured puts a great deal lately, and that they have been working out really, really well. Now, the thing with them is that you are long the market. And in situations like these, the best we can do is outperform the market. And that means even if we're losing on things, we lose less than the average trader, which it does appear that I have lost less than the market has lost. And that's a good thing. Now, that being said, some of my cash secured puts are up for assignment today, and I'm just going to let them get assigned. And they are going to get assigned a significant amount higher, but like I mentioned, that's okay because these are intended for the long haul. Once the market does end up grinding higher, which could be in a couple of weeks, and it could be in a couple of years, I'll be able to sell covered calls against those and continue grinding out more. And years from now, these will be a spectacular buy. And that's the real mind shift when it comes to covered calls and especially cash secured puts. It's very hard for people to say, hey, that's okay that I'm getting assigned, $20-30 above where the stock is. It seems like the end of the world when you look at the tree. But when you look at the forest, it can seem like a really, really great move, especially when you still have covered calls and cash secured puts on, bringing in that really, really rich premium that comes with this high implied volatility. I hope that helps. This is Dan Passarelli. Trade smart and have a nice weekend.